Hello fellow entrepreneurs, welcome to my channel. I am your host Xoliswa Moraka, the Purposeful Entrepreneur. If you're new to my channel, please do not forget to subscribe by clicking the button below. And if you've been here before, I hope you continue to get as much value that it will enable you to make informed decisions around the type of business and the type of life that you want to live. In last week's session, we talked about the three strategies of getting into business. We covered the first strategy in detail around setting up a new business from scratch. In today's episode, we will cover the two other strategies, which is around buying into a franchise or buying into an existing business as a business investor. In today's episode, we are going to cover the two other strategies of getting into business, which is buying into an existing business as a business investor or buying into a franchise or a distribution license. Buying into an already existing business. So what that means is you can buy equity in an existing startup, a small business, or a big corporate. And what you do in that space, you can either decide that you want to be actively involved, and obviously that is determined by the equity that you have in the business. If you buy into a business, you can decide what role you want to play in the business, but that also is determined by the equity that you have in that business. So let's say, for instance, you buy a business and you become a majority shareholder in the business. You can decide that you want to be an active player in the business, whether you hold a CEO position, a COO position, whatever the directorship position that you can play, you can decide. Or you could buy into a business, buy a minority stake in it, and don't get involved in the day-to-day activities, and you just get the returns either from a capital gains perspective or cash flow from the business, and essentially you start setting yourself up as a professional business investor, and you can have multiple of those type of businesses that you invest in. The big requirement for this type of business is that you either have to have money or you have to have a resource that the business owner or the business that you are wanting to buy wants. So it's value exchange. So you need to be very clear on what value exchange you are providing with the partners that you are wanting to go into business with. The challenge is, again, like the first business, is the failure is still a reality. So as a business investor, you might lose all or part of your investment if the deal goes wrong. So you need to also go with that understanding in mind, that it's not all because it's an existing business, then the failure rate is non-existent, or that the success rate is high. The business can still fail for a number of reasons as well. So just be mindful that there are risks as much as there are rewards in this type of category as well. Now, the last strategy that you can use to get into business is to buy into a franchise or buy a license to distribute whatever product, or to become the service provider for a particular product that is existing. Whilst the failure rate is a little bit low, apparently stats is 25% failure rate in this space, which is good. However, for somebody that wants to be their own boss, for somebody that wants to have the creative control of a business and to determine the direction of what the business has to do or go, or how the business needs to be run, this might not be a viable option for you, because with a franchise, you are buying into somebody else's vision. You are buying into a business in a box, essentially, where an operational manual will be given to you, where you get told how to run this business, how to market it, how the brand needs to look like, and you need to subscribe to those terms and conditions. Failure to do it means you might lose your license, you might lose your ability to run this franchise. And also, it is important to choose your franchise right, because not all franchises are made equal. Not all franchises will work simply because they have a proven business model. You need to also assess the location that you are in. You need to assess the environment in the market that you are servicing, because all those things can influence your success or failure rate of your business. If you're a new entrepreneur, or you're somebody that wants to transition into entrepreneurship, I really encourage you to take a bit of time before making the jump to do your research. Do your research, understand the types of businesses that are out there. And I've covered 3, but maybe there's more. You need to do your research and to find the right business strategy for you based on your own unique circumstances, your appetite, your risk appetite, and also your financial desires. Your financial desires and just generally, what is it that you're wanting to do with this business? So if you have a business, what is it that you want to do with it? Do you want to leave it to your kids? Do you want to sell it someday? So what are the terms and conditions for whatever strategy that you're going into? So be mindful. I mean, we can be seduced by the idea of freedom, the idea of making money, but when you don't understand what you're getting into, you might actually lose a lot. So just be aware and make an informed decision. I really hope you found value in this particular episode, and I look forward to engaging with you further. Please do not forget to subscribe. You can follow me on social media, Xoliswa Moraka on LinkedIn, Xoliswa_Moraka on Instagram, at Xoliswa Moraka on Twitter, Xoliswa Moraka on Facebook. And you can check out our website, my company, Collab for Growth, which is a personal and enterprise development consultancy supporting entrepreneurs to thrive and to grow themselves and their businesses into assets of value. Our website is www.collabforgrowth.com. I look forward to connecting with you. Enjoy your day. From my heart to yours, goodbye.